And we have some inflation, a lot more than anticipated. On a month-over-month basis, the CPI rises 0.9%. The forecast was for 0.5%. The core rate up also 0.9. The forecast there 0.4%. On a year-over-year basis, we now hit 5.4% for the CPI, and the core at 4.5%. So some significant increases in prices this last month. Let's take a look at some of the ones that we have here in terms of the change. Food is up 0.8%. Energy up 1.5%. And that includes a 2.6% rise in gasoline prices, which is going to be a problem down the road because, of course, gasoline continues to rise. The used car prices still contributing to this, up 10.5%. Apparel prices up 0.7%. Those have been rising as well. Services overall up 0.4%. So we're seeing some significant moves. We're also seeing a big move in shelter, up 0.5%. That was only 0.3 the prior month. So we are getting some broader based inflation than we had before, but we need to go through all the numbers and check them out. But the headline number, 5.4%, a lot of people are going to be a little worried about that.
Mike, that's the data. The interesting part of this story this morning was always going to be how the market responds to that data. This is important. A lot of the action you're seeing, the high yields, are at the front end towards the belly of the curve. It's not lasting too long. Just keep an eye on it. Yields are up on a 5-year by 2 basis points, almost 3 on a 3-year, a couple of basis points on a 2-year. Your 30-year yield is coming off the lows. I acknowledge that, but it's basically unchanged on the day. So you have a flatter curve led by a lift at the front end of the curve through the belly. Now, Mike, this is about how the Fed will react to this data. That is clear from what's happening in the bond market this morning. There is a belief held by a lot of people that the Fed won't let this go. Because if people did hold that belief and that was held widely, what you'd expect to see is a really big lift at the long end, on 30s, on 10s. And I don't see that right now. I see the lift more at the front through the belly of the curve. Mike, what does that tell you?
Well, it tells me the markets have bought into the transitory regime, either because they think the Fed will react or because they think we are not going to see inflation last. We're getting the numbers now that many people did expect, but it won't go on forever. Now, obviously, Jay Powell speaking tomorrow before the House Financial Services Committee is going to be asked about this, and I'm sure he will say, we are not going to let this go. If inflation were showing signs of breaking out, we would react to that. Just a couple of the other numbers that people have been watching in terms of whether this is transitory or not. Airline fares up again, 7%. They were up 10.2% the prior month. So we're seeing the kinds of inflation in some areas that we have continued to see, but we're also seeing it in some other places. I said shelter was up, and it was on an overall basis, but owner's equivalent rent is up 0.3%. That's the one that we look at to see what home prices are having, what effect home prices are having. 24% of the CPI, up 0.3%. That's up from 0.2, but it's still not a breakout. A lot of people had been predicting that. So we'll continue to watch and dig through all the numbers, as will Wall Street. But right now, the initial print comes in at the highest since 2008, August of 2008.
Thanks for watching Bloomberg Quicktake Now. Subscribe to our channel to see the biggest stories the moment they happen from around the world. And tune in to our 24/7 live stream for global news coverage, interviews, deep dive shows, and documentaries on the stories you care about most.